Hey traders, welcome back to the Ticks and Trades Futures Market Recap, where we don't just follow the market, we track it and trade it by following a process to pull E-mini points out of the market on most days. Today's recap covers Friday, June 6 and Monday, June 9. That's today. And spoiler alert, the bulls are still kicking. SPY finally got to 600 as predicted. Let's dive in. Here are the levels and the game plan for Friday. Friday morning opened with price hovering in a key decision zone. There was a zone between 595.67 and 594.80. Those are the levels that are blue here. That's a spot we've been watching pretty closely for the past few days. Last week, that zone sat right on top of the rising trend line that we've been talking about in prior recap videos. You saw that trend line a moment ago on the daily chart. The bulls needed to defend it to go higher, and they did on Friday. Below that was the open gap from Thursday's close. Price briefly dipped under it overnight, but they reclaimed it in the pre-market. So it looked like it might act as a soft safety net if things got shaky. The key takeaway from Friday was hourly closes above that zone supported bullish continuation, and closes below was a possible shift in control to the bears. Now, personally, I set out on Friday. I had a small window of time to trade before a morning appointment, and after a solid week of quick base hits, I didn't feel the need to force anything. As I've said before, this strategy shines brightest in the first 90 to say 120 minutes of the day. Really, all you need is 2 hours. So if you're short on time, know your levels and your setup, or just don't trade at all. You can read through the game plan and take a look at what the market looked like in this screenshot before the opening bell on Friday. But here is what the entire day looked like on Friday. Price opened well above the zone. They were down here the day before. They opened all the way up here above the zone. The zone is the dashed lines, in case you're wondering. They immediately climbed to 600. They spiked it. Did not get quite high enough to hit this level we had on the board at 60102. So no short trade up here if you were playing by the rules. You could have gone short right at 600. That would have been perfectly acceptable with the assumption that the first hit of 600, now that they're back up to this area again, would be the best hit. You tend to get good support and resistance at big round numbers like this if price comes right into them, up or down. So the one official trade was this long trade at 597.65. Price fell back down into it here. So a base hit of 4 or more ES points was pretty easy if you chose to get involved in this trade. They came back into 597.65 again. They bounced after some time here. But according to the rules that we trade by, this second hit of the level was a no trade, simply because the first hit is usually the best hit. So one official base hit trade on Friday. Fast forward to Monday, which is today. The levels du jour and the game plan are in front of you. Feel free to pause the video if you need more time to read through the notes. In case you're wondering, this is what the back end of the Ticks and Trades website looks like for subscribers to the daily levels. The assumption is that you've taken the E-mini Trading 101 course if you are receiving these daily levels, because then you'd know how to trade them. There are things that you would know what to look for as price reacts at or around the levels. It's a process. But moving along, this is the rest of the game plan with a screenshot of what the levels look like before the opening bell. So we've been saying it for some time, over a week at least, it's hard to kill a bull. Today was another attempt by the bulls to grind higher. Although they did fall back a little at the close, basically ended on the flat line, they did attempt to get above 600 and stay there throughout most of the day. So on Monday's game plan, we reiterated that price is now above that upper trend line. Momentum is clearly grinding higher. Monday's action continued to favor the long side, especially while the SPY would stay above 600. And if price were to pull back, we were going to keep an eye down at 596. That was the bulls line in the sand. That's below where price is here. 596 is all the way down here, above that zone. Did not come into play today, so we were talking about what happened if price stayed above 600, if the bulls could do it, because the path of least resistance tends to be up, especially on light volume. And there was kind of low volume as price was kind of meandering along. But this is what price action looks like on the 1-minute chart. So these two levels were hit early on when price fell down into them within the first few minutes. But one rule we have is to give the market 15 minutes to settle in before starting to look for opportunities to trade at these levels. So in today's case, the level at 598.66 down here proved to be the early support, and price was already climbing above it when that 15-minute window opened. So no official trade down here early on if you were playing by the rules. But going short at 599.60 at about 10:13 a.m. or so was a valid trade. Treating this as a process meant you stayed in this trade and you let it develop. You had 600 right above, kind of a safety net if you want to scale into the short position. This whole zone, this whole area, I didn't make it a zone, but you know that 600 is right there, basically had psychological value. And really, there's going to be battles around 600. They're going to continue until either the Bulls or the Bears gain clear control. So once again, playing by the rules for Monday gave you one official base hit trade right here at 599.60. We're talking about base hit trades in the E-mini futures. Before we look at the recording of the trade that I took, let's zoom out for a second, but not really on the chart, but kind of on life in general. Most Americans earning $100,000 a year take home around $280, maybe $300 per day after taxes. But that's working 8-hour days, 5 days a week. But here's the thing. If you use a repeatable futures trading strategy like this base hit, rinse and repeat approach, you're trading just 1 to 2 hours a day. And it is possible to more than double that daily average income with a small handful of well-placed contracts. So if you're serious about it, 1 or 2 disciplined trades at or near the daily levels with clear structure and tight risk can realistically generate 400 to 600 or more in a single morning. And that's not a home run. Those are base hits. You add size gradually, you scale up, stay consistent, and this becomes a serious alternative to the full-time grind. As you'll see in the tracking log at the end of this video, the daily averages are consistently solid, and that includes all days, whether they were good, bad, or ugly. But the point is, trading the morning session gives you the rest of the day for whatever you value. More time with your family, going to the gym, reading, building your side hustle, or even just doing nothing at all and not having to ask anyone for permission. That's not hype, it's math. It only works, though, if you respect the process. So if you're trading to buy time and freedom, not just Lambos, you're in the right mindset. But enough about that. Here is the trade that I took. This footage covers the entire day, but the trade that I got into was actually in the afternoon. And this was because I was busy with a few things in the morning and missed the earlier opportunities. I wanted to be on the long side, and we already talked about that early support at 598.66 that was established before I was willing to get involved in the market. So I let things go for several hours. I did not trade 599.60. Like I said, I just wanted to be on the long side. We know this worked, but just didn't want to babysit that. I was kind of busy with a few things, but I'll let this thing go. I decided I really wasn't going to trade anything. You'll see all the levels go dotted right there. But I saw kind of a couple little clues present themselves in the afternoon. It was after 2:30. I'll let this go from here. That basically there was a little bit of a pullback, and I thought that would probably result in a push higher, at least enough to grab a couple quick points. So I went long with 6 contracts right there and pulled 2.5 points. Not a whole lot of drama. So it's not a lot, but it's always good to pull something out of the market when the opportunity arises. Like I said, there was just a couple clues that I just kind of jumped in pretty quick. So I went ahead and let this recording go until the end of the session, but didn't do anything else. So 4 o'clock is right there and continues into the post market. We are at the tracking logs now. Both days, Friday and Monday, gave a single base hit of 4 points at a minimum. This is if you were playing by the rules. Notice the daily averages per number of contracts traded. This is for 2025 so far. And by the way, when I built this spreadsheet, I made it to ignore zeros for the daily average. So if there were no trades taken for a day, the average just stays the same at wherever it was at that point in time. But if you want to look at this seriously as a Monday through Friday kind of business, you need to consider that there are typically 250 trading days in a year. So if you don't trade on one day for some reason, or you do trade but end at break even at the end of the day, what does that look like realistically over time? We can look at what trading 2 contracts at every level looks like, even counting the days where no trades were taken if we went back to the beginning of the year. And that's significant because, as you recall, there was an entire week, second week of April, where we didn't trade at all. That was when the bottom was dropping out. A lot of the tariff talk was happening. Things looked pretty hairy. It's just better to sit back and let things settle in. So anyway, including all those days, the average is $437. You can see the difference. 42 ignores the zeros. 437 considers the days with no trades. What about 3 contracts? Can you afford to trade 3 contracts? $656 per day before taxes. Just something to think about if you've ever considered making your trading more than just a hobby. So on the Sam's trades log, there were no trades on Friday, and the one trade just 2.5 points, 6 contracts. There's the 750. And you know that the vast majority of these trades happen in the morning, with the notable exception of today, ironically enough. If you've been following along, you've seen these trades because they've all been recorded. So the takeaway here is that focusing on the market for just 2 hours or less each day, each morning, depends on what time zone you're in, is enough to let you pull consistent dollars from the market on a regular basis. So I wonder when we're going to hit 100% return. and double the $50,000. Getting pretty close. Once again, here are the play-in by the rules trades since the beginning of 2025, and here are my trades for the year. Okay, so final thoughts. What did we learn? That zone around 595.50 to say 596.50, basically where this trend line is, it's critical. The bulls need to stay above it to remain strong. And SPY 600 was and is a key psychological and technical level. The bulls are trying to claim it currently. The daily levels continue to give strong reactions when combined with proper structure, and most importantly, when you master a high probability setup and stick to a disciplined execution, you don't need all day to make a full day's pay. So that's it for today's recap. If these levels helped you prepare or helped you pull a profit, drop a like and provide feedback if you want. I'll see you back here for the next trading day with a fresh set of levels and another clear game plan. Until then, trade well, and remember, the first hit is usually the best hit. Thank you, and have a great rest of your day.